It's Thanksgiving, so time to have a little bit of fun with investing. I'm going to go through the 5 stocks that I am really thankful for in 2025. These have driven my returns in the asymmetric portfolio. I also want to know what your stocks are that you're thankful for. We all have different portfolios, different risk profiles, but when you look back on the year so far, what stocks are really standing out to you? I'm going to start with my biggest holding in the asymmetric portfolio. That is Robinhood. Robinhood shares are up 193% so far in 2025. And guess what? Their quarterly revenue just grew 100%. So the company's operations are doing phenomenal. Multiple expansion is playing a role in this. You can see that their price to sales multiple has actually exploded. At their high, they were over 30 price to sales multiple. So obviously the market sentiment around Robinhood has really changed over the past year. What I love is that this is becoming a go-to application for those of us who use it. I'm using it more and more. I've got the Robinhood Gold card, 3% cash back. You really can't beat that. Yes, it's got to go into the brokerage, but that means that I'm saving 3% of every dollar that I'm spending. Just a phenomenal incentive. And those features are just getting better and better. Ironically, this is not one that I bought in quite a while, but I'm just letting my winners win. So love to see everything that's going on with Robinhood. Alphabet is another one. Look, I was buying shares of Alphabet in April, in May. I love this stock at a 15 to 18 price to earnings multiple. You can see that the shares have just absolutely exploded since then. For year to date, up about 71%. It's going to be actually, this is before the market closes on Wednesday, but the price to earnings multiple has gone up as well, now over 30. This is actually one that I may trim in the near future if we start to get a little bit more valuation concerns, but doing absolutely everything right. The cloud is growing, YouTube is growing. Let's not forget about Waymo too. Waymo is one of these businesses that could be worth $1 trillion 10 years from now. Yes, I said $1 trillion, and it's just hiding under Alphabet. So love everything that they're doing. I think Sundar Pichai is making all the right moves. Sergey Brin is back in the fold. So thankful for everything that they're doing, all the value that they're driving to shareholders. And I think this momentum is just going to continue. I've said throughout 2025, they're going to bludgeon the competition with their balance sheet. Looks like they're doing exactly that. This is a company that I want to be backing in the AI revolution, where whether you're talking about Gemini or search or even Google Cloud, all of those good things are going to be very well positioned. So love having that as one of my biggest positions in the portfolio. Number 3, let's go to one that a lot of people haven't really heard about. Owlet, very small company, less than a $400 million market cap. Got a little bit of a complicated capital structure. They've been trying to improve that. They actually fired their founder and CEO actually left earlier this year. I think that's actually a phenomenal move. They're starting to get momentum. These are the little sensors that you put around a baby's foot. I've used them for all 3 of my kids. You get information about what their heart rate is, what their oxygen level is, things that you don't necessarily know and you might be concerned about if you're a parent. Now we're starting to get to the point where they're tying that data, that information, to doctors. So a doctor can help understand what's going on with the baby a little bit more. They're starting with a little bit more at-risk babies, but this is one of those things where the more information that we can have about people, about healthcare, that's going to be a really valuable thing in the future. Owlet is playing a big role in that. And I think there's opportunity to expand not only into new markets, so they're moving into places like Europe, tons of opportunity in Asia. If they become a default product that when you leave a hospital, you go home with a breast pump and you go home with an Owlet sensor, that's going to be, I think, where you see the real 10x, maybe even higher than that potential for Owlet. But look at this. Shares are up almost 200% so far this year. This has quietly become one of my bigger positions. And I didn't put a whole lot of risk there. This was a high risk, high reward stock. So 1 to 2% of the portfolio, really all you need. If you're right about that, suddenly that drives outperformance of the portfolio long term. So love what I'm seeing from Owlet. Very quietly a winner. And if it does get to some more attention from the market, I could see shares going significantly higher in 2026 and beyond. Number 4 is Spotify. Spotify continues to be one of my biggest holdings, and I have not bought shares for about 1.5 years now. But Spotify just continues to grow like crazy. 600% returns over the past 3 years. So this is what I'm writing. Again, this is let your winners win. That's exactly what I'm doing. Shares are only up about 28% so far in 2025. But the operations are moving in the right direction. Continue to grow, continue to add subscribers, margins continue to go up. Part of the drop in the stock recently has been because they've talked about increasing their prices. That may not make people very happy, but guess what? That's how you make more money. That's how Netflix is making more money. That's what you do in streaming. You become the default and then you ratchet up those prices and that profitability. That's exactly what Spotify is doing. I think they're pulling all the right levers. Again, gotten a little bit more expensive, but these returns have really helped drive the asymmetric portfolio over the last couple of years. So you got to appreciate everything that's going on with Spotify. Finally, SoFi Technologies. Again, this is one of those beaten up companies that when I was buying shares, people didn't think that this was a great bank stock. They didn't think it was a technology company. It's trading for more than its book value. That's an overvalued company. Guess what? Multiple expansion has played a huge role and the company continues to grow. They're becoming much more of a platform. And that was always the thesis behind SoFi, is that you're going to SoFi for all your financial needs, whether you need a loan, a mortgage, whether you're investing in stocks. Now they're moving into things like cryptocurrencies and payments, trying to disrupt that space. Ton of opportunity for SoFi to grow in the future. Again, gotten a little bit more expensive. That's going to be a theme here. If a stock goes up 100, 200% in a year, and with SoFi, we are up about 100% for the year and potentially more than that by the end of the day on Wednesday. That means that valuation can become a little bit more of a concern. But again, I'm letting those winners win, not necessarily adding at these prices. But once these companies become a bigger position in my portfolio, Robinhood is 14, 15%. SoFi now about 8, 9%. I can just let them ride. And if the stock does pull back a little bit, want to buy these opportunistically when that makes sense. But these are the 5 stocks that I am appreciative of everything that's going on in the market. Their operations are improving and the sentiment around them is really changing. But what are the stocks that have driven your portfolio in 2025? Let me know in the comments section below. Love to hear what your biggest winners are. And everybody have a great holiday. I'll be back again with videos starting on Friday, but take a little bit of time on Thanksgiving to celebrate those wins. Thanks for watching Asymmetric Investing, everybody. We'll see you here next time.